What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Tony Riggs. How you doing today, Tony?
Doing great, Dan. How are you?
I'm great. We've known each other for a while, maybe like 6 months or more, or something like that. It's great to have you on here. But I got some great news for you, Tony. My very favorite audience member is joining us today. And why is my very favorite audience member joining today? It's because this is a chance encounter where I interview commercial real estate syndicators. That's buyers, sellers, investors, all that kind of stuff. And why would I do such a silly thing? Well, part of it is because if you want access to private deals, if you want to share private deals with each other, you have to have a documented prior substantive relationship so that when the SEC audits you, they can see that you're all on the straight and narrow. So I need to make sure that anybody in my circle, I already know what their story is, what their core competencies are, what contribution they're really going to be making. And I want to make sure that you learn to effectively communicate on the subject of commercial real estate. But before we get too excited about that, Tony, do you want to say a few things about yourself before we get into the details?
Sure. I served in the Marine Corps. I got out. I worked for a few small companies, and then I started my primary business 24 years ago, which still runs today. I have a commercial building, but I was never really in real estate, and so in 2022 I started to get a little bit interested in it, and so now I'm full born, moving forward with it, and meeting a lot of great people and learning a lot of stuff, whole different language. So it's been fun.
Awesome. Awesome. Thanks for that. So the first thing we're going to go through though is it's the five distinct motivations. Before I do that though, I got to say, but wait, check your eight. Tony, I don't know if you can look at the camera and imagine there's a clock, and down at the 8 o'clock there, it's the audience is five. There might be an awful red subscribe button on their screen. They really should get rid of it, but that's just a stupid joke I do at the beginning of all these episodes. So, the five distinct motivations. I found everybody has their reasons for getting into this, but I guess I want to know what is it that really makes somebody go through the hassle of making a commercial real estate acquisition, because it could take months and there's lots of things to go wrong. The first reason I found that's truly distinct is some people are preserving their purchasing power. Me personally, that's not me. Okay. But if you have an existing portfolio of assets and the proceeds from that are enough for you to make ends meet, then this is you. And then the only reason why you're going to make an acquisition in this case is because either inflation is eating away at the value of the cash flow, or if there's an asset crash, you can make an acquisition at a deep discount. That's when you're going to be doing it. But what I'm up to, it's all has to do with my tech background. Tech people, they're high wage earners, high salary earners. And the problem with that is you're getting charged more in tax than anybody else. So it hit me, why don't I pivot instead of just doing the tech job for real estate people? Why don't I actually get involved in the deals? And then that way I'm getting rewarded in deployed equity. So that's what I'm doing. But some people, they see commercial real estate, they hear that all this money's floating around, and they're like, I want some of that. And what they really are up to is they want to be able to take control of their schedule. Maybe that means working fewer months per year. Maybe it means fewer hours per week. Maybe it means fewer weeks per month. But regardless, they want to take control of their schedule. They're not looking to find more hustle. They're looking to reduce it. Whereas this next group, they're just plain ambitious. So they're looking for more hustle. They want to buy their entire hometown. They're after that generational wealth. They want to make sure their great grandchildren never have to hold a day job. Okay. So they're going to hustle into their 90s, which makes them great assets to any ownership team. But there's another group that's distinct from that. They'll be equally motivated, but it's not going to be related to the dollars and cents and that sort of ambition. Instead, they've chosen a sector of society, or maybe it's the environment or animals or whatever it is, but they've realized that you need a substantial financial backing if you're going to make a really big impact. And that's why they're making these commercial acquisitions. So, Tony, of those five different motivations, what combination of those jumped out and describe you best?
Um, Probably the ambitious side without the desire for the money side. I like to accomplish things, and that's always a win. I like goals, and so I love that stuff. And then the helping the people who need it, based off the fund that I've set up, is probably a high priority as well. Coming from an impoverished background, that's something that's very important to me.
I love it. I love it. And my next question, though, it has to do with tolerance for risk. I've seen a standard questionnaire that people put out for investors, especially if they're involved in 506B deals. And I wasn't really satisfied with the questions regarding risk to really let me know that the person I'm talking to really gets it. So, Tony, please fill in this blank. There are many popular investment asset classes, but I think blank is too risky. That can be real estate or non-real estate, or if you're feeling saucy, you can do both. But what's too risky for you?
Well, I think any investment, you need to be clear that you have money to invest, and have the possibility of losing it. But you weigh your investments, and certainly with real estate, you have a less chance of losing it all, right? But I would say probably still, crypto is probably still a little too risky. But if you're really good at it, there's people that are successful at it, and can make some good money. But it's still a very high risk.
I love that. I love that. And oh, good. The thing started already to tell people to subscribe. I'm so glad that I subbed. That was so epic that started by surprise. But we're on to the next part. So back to commercial real estate and reality. That's so weird. For that, I have the Dan Does Deals Commercial Competency Cube, and you can get your copy at dandoesdeals.com. Why is that important? It's because it will help you effectively communicate on the subject of commercial real estate, because in every episode of Chance Encounters, I go through all six sides, and then that way you know how my guest fits into a commercial deal. So don't forget, I don't ask for your email address or anything like that, which is a terrible idea from a marketing perspective. You should always ask for contact information in return for your freebie. But I want to make sure that there's no barrier. You can just go to dandoesdeals.com, download it, print it out, practice with your friends and your family and all that kind of stuff. But let's do this. It just takes 2 minutes to go through all six sides. First one, the repositioner looks at a bunch of different properties and does a bunch of paperwork. What is this mysterious paperwork that they're doing? Well, sure enough, there's a fancy word for it. They are underwriting the deal. What does that mean? It means they're doing the math, they're doing the arithmetic. They need to find out, first of all, is this property actually making the amount of money that the seller slash broker claims that it is? Because it might not be. And then the reason why these guys are called repositioners is because they're also figuring out how to find more upside when they take over this property. How can they change it? Now, one simple change to understand is they will have investor relations dealing with a bunch of financiers. Financiers are people who only deal with the paper and with the money, and that's what they're really up to. And the repositioners would need to know them, because if you can find more advantageous loans, then that goes straight to the bottom line, because it reduces your costs on debt service. But let's assume that the repositioner is looking elsewhere for ways to make more money on this property. First place they're going to look is operations. They're going to make sure that those Benjamins stop going down the toilets. But of course, there's more to operations than just unclogging toilets and collecting rent and doing work orders, different things like that. One that is one of my fortes is because I've got this marketing background through CRMs. I can automate things. I can also make sure that vacancy rates stay low, even if you're outsourcing. So that's one thing that I bring to the table. But usually, because commercial real estate is so competitive, there's not that much room for upside through just the operations. So frequently, the repositioner will get the contractor team involved. They will upgrade the units. It's called a value add or renovations. And the purpose is that way the next tenant will be happy to pay more in rent than the previous one, because it's a nicer place. But of course, you can spend endless amounts of money on contractors without it actually being any better. So the way around that, especially if you're like me, I don't know if you know this, but I'm from the internet. So that means I need to rely on locals, the boots on the ground, the people who can be there in an hour or two. Because as you can see, in an hour or two, I'd still be stuck at an airport. So that's not going to be me. All right. But once the repositioner has assembled this team and they've got the property in hand, they turn around to the financiers and like the banks and they say, hey, we want to buy this building. It's 350 units, tens of millions of dollars. Do you happen to have, say, tens of millions of dollars you want to lend us? And one big burning question that's going to be on the financier's mind, and you are going to get asked, is who is your sponsor? Who's the KP? And what's that all about? Well, some gurus tend to gloss over this point, but if you want to be eligible for a commercial loan, you have to have somebody in the fold who already owns a similar asset. Okay. Otherwise, you're just not getting the loan. So even if you have a bunch of wealthy friends or something like that, you pool your resources, that loan is going to be a problem. But what
Yeah.
else is going to be going on? You're going to need a certain amount of liquidity, and you're also going to need a balance sheet among the owners of at least the amount of the loan. But if you have all that, you've got yourself a commercial real estate deal. So, Tony, you have an OZ fund, which means that puts you in the financier part. I imagine there's some sort of deal finding aspects, but makes you like some kind of a repositioner as well. But how would you describe what you're most likely to contribute to your next deal?
Well, as the fund manager for OZ Growth Fund, which is a 506c Reg D, I'm responsible for identifying the assets where the money's deployed out of the fund. So not only do we have to raise capital into the fund, capital gains, we also have to find the assets and vet the asset and make sure it's a good deal for the return to the investors into the fund.
Mm-hmm.
So my concentration is on the actual fund itself and the responsibility there. Um, However, we kind of touch all facets of it, but it is extremely passive for the investor. So they're not having to deal with the locals or the underwriting or anything like that. They're really investing into the fund itself.
Mm-hmm. I love that, and I definitely can relate. Like, 506c is such a load off your mind. It's so weird being involved in a B because every time I've met somebody who's involved in a B, I have to speak in the third person. It's exhausting. Okay, right? So, yeah, every single time they're involved in a B, then that is all they're thinking about all day, every day, and they're not even allowed to talk about it. It just blows your mind how difficult it is. But as far as the properties themselves, I already mentioned the OZ fund side of it, but when syndicators are talking to each other, investors, and we say, what's your buy box? That's the next question. It means what's your ideal property? And there are really three main parts to that in general. The first one's going to be geography. So which states are you looking in? Which counties are you looking in? Possibly even which neighborhoods, okay? That's all going to matter. The second one's going to be the size. So, Tony, I'm not sure about your fund as far as what types of commercial real estate is going to be in the OZ, but in general on this show, it's multifamily. So the size is going to be the unit count, and it's going to be important because you have different groups taking over 15 unit apartment complexes compared to the 150, 350, and so on. So that size is going to matter. But the third thing is going to be the class. And I separate class into two different words. One is condition, so that means the shape of the building, and that's assuming that there is a building. And I think Tony, some of what you're up to is ground up. We'll get to that in a second. But if it is an existing property, it's how old is it? Is it up to date? Is it no frills, or is it full of amenities and luxuries? Okay, that's the condition. Now the second meaning of class, I call it the area. And what it has to do with is the traffic nearby. It has to do with the crime rate, where the property is located, and the school districts, what they're like where the property is located. But both of those two meanings of class are rated the same way as in grade school, where A plus is at the top, and then A minus, and B plus, and so on. So, Tony, you can take this however you like, but what exactly is ideal for you and your organization?
So geography is kind of irrelevant because it's as designated zones around the country. So there's 8,700 zones around the country, not pieces of property, but actual zones that have thousands of pieces of property in it. And ideally, because of substantial improvement clause and opportunity zones, ideally ground up development is the best, unless it's an abandoned building for more than 3 years, or substantial improvement can be put into it. Because the idea of the opportunity zones is to improve areas that aren't normally getting capital into the area. And that's my portion of, feeling like you need to help somebody, right? So ground up development. Right now, our first real estate project we're looking at is a commercial hotel. The beautiful thing about opportunity zones as well is that we can invest in business and real estate. So that gives us two components to the fund. So really, it can be multifamily. It can be, single family, multiple single families as a business, manufacturing plants, hotels, just a variety of strip malls, just a variety of products that can come there. So,
Excellent.
and opportunity zone doesn't make it a better deal. It's the cherry on top. The deal still has to underwrite and still look good and be profitable to the investors and make sense. So yeah.
I love that. Yeah, that's fantastic. So the next question then has to do with who you're best suited to help. It's fantastic that you do 506c, so you can just go ahead and say to the camera, if you're an accredited investor, go ahead and reach out. But in general, you kind of have to be a little bit more subtle, but for me, that my favorite part about commercial real estate is people are so eager to build teams because it's multifaceted. You're not going to be all of these sides for any meaningful amount of time. But even though you're so eager to help build these teams and make referrals and whatnot, your unique skill set will make it so that you're better off helping some people more than others, or you're disproportionately well suited to, I should say. And me personally, because of my marketing and content creation and all this weird stuff that's what you hear, the sponsors and KPs are generally who I'm best suited to help, and that's because they've already got a foundation where you're not just getting started, which is when you need people who are doing 80 hours a week to help you out. I'm more of the guy who automates, and so that's why I can help with those. But so Tony, as far as you goes, like, is it the passive investors, the financiers that you're generally looking for, or who are you best suited to help? Who should reach out?
Well, like any business and fund that you set up, you should build a great team around yourself, and that's what I'm doing currently. I have a great law firm that supports me legally. I have a great capital raisers. So we're out networking continuously. We're obviously looking for the accredited investor that wants to come into the fund and deploy capital gains. And basically, there's no one particular person I'm looking for right at this moment. Just networking and communicating and seeing how I can help people as well as I run across what they're doing and talking to them, and then seeing if there's synergies. We have a great architect for designing buildings right now. I'm working on a personal development myself, just so I can have the experience of going through the entire development process to make the accredited investor feel more secure that I know what I'm doing. But really, I'm looking for more personal growth myself. That's important to me.
All right, excellent, excellent. So basically, just about anybody should reach out. And as far as ways to reach out, I've got this really distinct last name. LinkedIn's the best way to find me, and that's going to make it easy to find you. But if you use your phone and you scan this QR code, that'll bring you to the FAQs page of 506 BME, which is the platform where I offer the documentation service for your investor network, so that you've got that all buttoned up. But Tony, what are the best ways to reach out? Is it through a website or a social media platform? Go ahead.
The absolute best way is LinkedIn. It's Tony Riggs, and I have a blue background behind my picture. But the website for the Opportunity Zone Fund is OZ Growth Fund. That's also another place you can go learn more about the Opportunity Zone Fund.
Excellent, excellent. And I guess the other thing that you can plug as well, and we'll try and get more detail in another segment, is your Spark Alert service, which is a really interesting proposal for increasing security in multifamily buildings without the massive contracts that you get through other services. Do you want to like where do you go for
Sure.
Spark Alert?
Sure. So it's sparkalert.com, SPARK alert.com. But yes, we are looking to revenue share with multifamily owners to increase their NOI. It's tenant based, so there's not a lot of restrictions or weight to carry as an owner of a multifamily or a syndicator. Like I said, we're looking to revenue share. If you even if you advertise it to your tenants, we'll revenue share on the 24/7 monitoring portion of it. There's no wires, so it's not going to destroy your property, and there's no contracts, so you're not going to have to deal with any messes like that if a tenant leaves or anything like that.
All right, excellent. That's fantastic. And the last thing I have, though, it's actually not for you, Tony. It's for you in the audience. It's a public service announcement, which is if you've been watching this episode and you've been experiencing like seriously, it's like searing pains in your eyeballs, like a burning, and it's like the back of your head's like a migraine. Look, okay, it's probably because there's a hideous red button down here that says subscribe, and it's free to get rid of the thing. You just click on it and it turns gray. And of course, I'm a little bit biased. I want you to click it because if enough people do, then YouTube will actually start paying for these videos instead of me. And that would be amazing. But honestly, all it does is it means that my videos might show up on your list of suggestions and you can go ahead and ignore those. I just appreciate the fact that you spent this time with me. And just like Tony, I appreciate you joining me today. It's been great getting to know you a little bit better.
That was definitely great, and I appreciate the opportunity, Dan. And I think you do a great service for people out there. And if you have a 506B, I think you should definitely contact Dan because you don't want to have any problems with the SEC. And Dan's very, very well adept at explaining how you should document all these processes. And you didn't even pay me for that. I'm just telling you from my experience of talking to you.
Oh man, yeah, thanks so much. That's awesome. Thanks.
Yeah.
All right. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.